All right, hello everyone, and thank you for joining the Talga Resources Investor Webinar held today on Wednesday, 25 November. Today we will run through an overview of general corporate activities for the company, including a presentation. We will also touch on the recently announced share purchase plan. Your host today is Talga's founder and Managing Director, Mark Thompson, who I'll hand over to now.
Thank you, Shane. Thank you, everyone who has joined us from around the world, including very early in the morning for our Swedish shareholders and stakeholders, and in all the other jurisdictions. I'm just going to run through the investor presentation at first, touching pretty lightly on things, so then we can get into the questions, into the live questions from you. Let me see if our technology shall work. Okay, we've lost clickering. Can anyone change that? And so when we set up the video screen, it somehow has kicked out the use of the screen. Sorry, everyone, we're just going to sort that out. Okay, can you guys see that okay? All right, thank you. Vertically integrated producer of advanced battery anode materials. This includes, they're fundamentally made from graphite, but this includes graphene. We are still on track to build the first and largest supply of active anode materials for lithium-ion batteries in Europe. This is fully coated, ready to sell to a battery manufacturer, cell manufacturer. We still own 100% of that supply chain, from the ground through the processing to the technology, the IP in the product itself. And we have built a strong team, predominantly professionals in not just the mining and the processing field, but also in the chemistry and use of lithium-ion batteries. So it is we still today, as far as I know, probably the most integrated anode supplier, certainly as a listed company on Australian or Canadian or UK exchanges. All right, our project, as we've previously published with the PFS, involves a mine and a concentrator up near Vittangi in northern Sweden, taking a couple of trucks of concentrate per 24 hours down to a refinery in Luleå on the coast. And this can operate over 22 years, producing about $190 million a year in annual revenue. That's over $4 billion a year of revenue, life of mine revenue. And the first stage of that costs about $27 million US in CapEx. But we'll go through that a little bit later. They're just the highlights for people that are new to the project. Company's cash balance end of last quarter was $5.5 million. I guess just want to point out that with the share placement we've just completed for 3.25, that does bring another very quality Australian institute onto our register. They'll be top 20, along with some other Australian institutions and international also. So really just pointing out that there's no great change in the top 20. If you do see some movements, it'll be for the dilution of that placement, and it'll be some of these new institutions coming in, and some other of the top 20 just shifting slightly as they dilute. As we understand, you'd be well aware by now that the plans for going into development are well underway. We lodged our documentation for the stage 1 actually in August, and we're expecting, hopefully, but at the earliest, we would expect something by the end of next month on the approvals process for stage 1, if not during the first quarter of next year. But certainly that's been a comprehensive and very well-run process that's looking good for the permitting of both the mine and the concentrator and the refinery. Just to point out that down in the refinery, that site is being permitted by the local government, by the municipality, and we would be their first customer. So we would pour concrete, we would do our permitting on top of theirs. So they're developing a heavy industrial area, so we're fully permitted for most of the things already, and then we sort of have a separate process on top. That's just for the refinery. Mining would be scheduled to be starting in July next year, and we would start construction of the refinery at the end of next year, and that would be operational, being commissioned and producing material in 21. Still #1 in the world for grade of the basic resources, far and away 20–30% more than the ore reserve grade being fed into some of the larger mines operating at the moment. 100,000 tonnes per annum throughput planned. I've had some questions recently about scale. We've recently increased our resources of the project to just under 17 million tonnes. I just want to point out and remind you that only 2 million out of the 17 million are in that current PFS study. So that the economics of that project run on about 1/8 of the current resource base in that area. And the refinery I just discussed as well. I guess the important thing is Bloomberg New Energy just put out a very nice slide showing the CO2 budget, the cost, the environmental cost of where you make batteries in the world, and #1 for low CO2 and low costs to the environment was in Sweden, particularly North Sweden, where the power is all hydro-based, so it's very sustainable power. On the product side, Talnode C is it's our flagship product. It's one of many that we are developing in layers to suit the market as it evolves, but that is a high performance, fully coated product ready for someone to mix into a slurry, pour into a current collector and make the cell from. It's got semi-synthetic properties, which is why it's looking at a premium in the marketplace for pricing. It's got like the longevity of a synthetic product, but it's also got the fast charge capability of a natural product. Our position in the supply chain is frankly is competitive with groups like Hitachi and POSCO. Rather than buying our material from China and just coating it and reprocessing it to sell it onto a cell manufacturer, we have our own carbon source. But when it comes to our customers are their customers, in that they're the actual cell makers. And here you can just see on this slide collection of mostly European and Japanese and Korean cell and OEMs who are the people that we work with towards selling our material. They're our customers. I won't say too much detail about costs and pricing in the industry other than there is a constant pressure downwards on, there is increasing scale in the industry, and with that you can get lower costs. So it is with us, but at the moment we are still cheaper than China for producing fully coated anode. And that's the important part, is when you look at our combination of the deposit grade, the cost of the energy, and our processing technology, which gives superior yield. So instead of losses of 50%, we have losses of less than 15%. We supercharge, in a way, our low costs compared to other parts of the world. So this is still very much intact and is key to why it's worth doing. Battery demand. Certainly in the last year, there's been a lot of negativity in the marketplace to do with China changing its subsidies, leading to a drop in lithium pricing. We saw earlier in the year cobalt pricing coming off all-time highs. Lithium, cobalt, vanadium prices all coming down, but they were coming down from all-time highs. But the sentiment turned a bit negative about batteries in general. This is actually pretty unwarranted. Battery demand, lithium-ion battery demand is continuing to boom like crazy. The mega factories are being built out at a faster and faster rate. The fastest growing place on earth for battery demand is Europe, and it's the second largest market in the world outside China. While just in the last 2 weeks, while I was away, Tesla announced that their latest gigafactory will be built in Berlin, in Germany, adding to the amount of tonnage you see on this list. So on this slide, we have about 300 gigawatts of capacity needed, annual capacity needed by 2028. That needs about 300,000 tons per annum of graphite anode. That's graphite anode that's been finished. So that would take, in a standard Chinese or African flake mine, that would take over 600,000 tons to supply before you make the anode with a 50% loss. We are now aware of another plant, a large plant, that will substantially increase this number by over 20%. That is not announced yet. Will be announced hopefully during 2020. So we see things just going faster and faster. I just got back from speaking at the benchmark conference in California 2 weeks ago, and it was very heartening to see that major automotive companies like VW and Tesla were at the graphite and anodes meeting. In previous years, they've been at the cathode meeting, not at the anodes part, but this year they were actually all the graphite and anodes part. So that was also another sign of the focus on the supply chain and just how strong it really is. We're in a good business at the right time. Our anodes come out of the same process that we've made graphene from. Essentially, we share the same. We've got one ore and many products. But the first major, the major build out of this refinery is on the anode material. In future, we certainly believe that with enough demand, graphene production will be added in modules to that refinery at a later point. Move away, let's see. So, anodes compared to everything else. Graphite is not a metal, it's a non-metal, and it's a bit unique in lithium-ion batteries that way. Lithium-ion batteries contain copper, cobalt, lithium, lithium is a metal, cobalt's a metal, copper's a metal, all the other things in there, manganese, nickel, etc. So they're all metals, and if you get a metal to a certain purity, you can reach a spec that someone will buy that material from you or give you an offtake for it if you meet that spec. In graphite being a non-metal, which makes up the anode, 50% of all lithium-ion batteries on Earth are the graphite anode, and that material has to reach certain specs of purity and shape and so forth. But because the shape has a big influence on how the particles work and how the battery works, the performance largely comes from the anode. Then battery makers have to test your material physically. They cannot just get a sale just from the spec. They actually need to test the material at length before they'll buy it. And for that, we need larger and larger samples. So they start with, could be small, 50 grams, 100 grams, then they go to kilos, then it's tens of kilos, hundreds of kilos, etc. But then you need to get into tons. And this is per customer. So we have tens and tens of customers under NDA testing our material right now. And that process needs to scale up. We've hit a bottleneck with how big our German facilities are, combined with our partners to make material. So this customer qualification that is happening now requires us to scale up Germany and make it bigger. Now, just to remind people, Germany, and our plant is in Rudolstadt. It's in the, it's about halfway between Frankfurt and Dresden. It's very, very central in Germany. It's about half an hour away from what will be the largest lithium-ion battery production facility in Germany, which will be CATL near Erfurt. We're in a permitted chemical site called Rudolstadt Schwarzer, and we have a beautiful building there we've leased that the roof, you can't see from this picture, but it's actually covered with solar panels. It's a very efficient building for working up our material. And inside, we've installed various equipment. We've been hiding for years, I guess. We're starting to open up, showing you some of the equipment, but obviously there's most of the important stuff we can't show you, and at scale is in other rooms. But this is our main floor during construction of some of that material. So this is what we're using. So we have a stockpile of ore from our previous trial mining back in 15 and 16. We're running it through here in conjunction with partners to make the materials to go out to the customers. And the main challenge right now is the flotation and purification circuits need to be brought in-house. So some of those are outside, and we need to bring them into the factory and scale them up a lot larger. And currently, we've got some partners in Japan where we've been working up our technology for the coating and the shaping and the final production of the anode. And that is also going to come in-house, but right now it's sending it over to Japan. So we need to scale it up. Right now it's in the single digits, and we need to get it up to the ton level mark. The idea of the stage development is also to remind you we have been mining previously, but stage 1 is 25,000 tons of ore. We do expect to get permission to do that in 2020, and that will be processed through a toll milling facility in that area. We're not revealing exactly where yet, but we have several places we're locking down to make a concentrate. We truck the concentrate then down to the first anode refinery that we build in Luleå as a module, and then after that we scale that up. And all that happens is we add the concentrator to Vittangi the following year or two as the scale needs to increase and as the permissions come through. And stage one is now is still that tolling facility on the crushing and grinding to make a concentrate, and then that comes over. So essentially what it means is Talga focuses on the refinery in the early days, and we keep the capital costs low by offsetting the crushing and grinding, which is sort of industry standard. And then we spend our time in the refinery, and then we do everything in-house and do that for 22 years, starting in 2021. We've been through the numbers before, works very well. The company's trading at about 10% of its net present value. And the timelines have not changed at the moment. The trial mine approval, as we suggest there, that we put things in Q2, Q3, which we did, and we're expecting permissions by the end of Q1 at the latest. Design and construction, mining and processing to start in the next couple of quarters, basically. And that's partly why we needed to get the placement away, and we're doing the capital raising right now. And then the larger approvals are going on behind the scenes. We're also pretty busy actually with scaling up of our other materials. So what we do is the Talnode C is today's bulk material. We have developed a silicon containing product, which we released some more details on in the last presentation. If you go have a look, there were some updates on the performance, now doing 1100 milliamp hours per gram. It's a pretty impressive product, actually. It's getting quite, it's looking very, very bright to the future for that product. And so we see a trend towards increasing amounts of silicon in anodes. So the graphite still, it doesn't really take away graphite use, because the graphite use is just continuing to grow. Then the silicon accretes onto that on top. And then further down the track, we have our solid state technology coming along as well. And we've announced a relationship with, funded by the Faraday group, with Johnson Matthey and the University of Sheffield on developing a graphite-ish based anode to use instead of metallic lithium in solid state battery technologies. And we have a growing list of partners. I think since we last spoke, also we've added Leclanche, which I'll just refer you to the original ASX release on there, but certainly we continue to develop our end user agreements, although we can only speak publicly about a fraction of them. So the main issues behind what we're doing now has been that we need to ramp up our production of even at this scale, from pilot scale, to meet the strong customer demand that's happening. We have got the facility, the upgrade to our German facility is underway. The discussion with end users, the customers for offtake and project financing is also underway, because that's the preferred way to finance the project. All the applications to get rolling are in, and the larger stage 2 is planned to go in pretty soon, actually in first quarter. DFS work underway initially, and I've just come off the road for 2 weeks around the world working with customers, trading houses, equity funding groups, banks. We're looking at many options for different ways to finance the project. That's all going well, and I think that is where we shall leave it, and we can move to questions if that's okay. Yep.
So, Mark, we've received a few questions ahead of time from shareholders, so we'll probably start with those. And just a reminder to anyone who's listening online that you can submit questions through the webinar platform. So the first question, and it's a multi-part question from Dimitri, and it's basically about the whole cycle of capital raising. So he said you're raising around 6.25 million at the moment. Mm-hmm. He's asked if you can explain the considerations behind raising the amount, and also sort of what was the balance and the decision behind raising that amount versus perhaps raising more equity in order to cover the stage 1 capex in full. And then, you know, are you considering debt for the remaining amount? So I think probably that's an invitation to just talk about the raising strategy in general there.
Okay, yeah, good point. Well, we know that we want a financial investment decision by the end of the first quarter. We've talked about that and planned that for the first stage financing. Before we get there, we have to scale up production, and we need to complete the studies that would allow debt if we want to go that way. So if debt is going to be a part of the structure of financing in stage 1, we're going to need to look at you're going to have a DFS to support that. Now, if we manage to have all non-debt finance with customers, for example, or development partners, strategic partners, then the DFS wouldn't necessarily be required, but you have to sort of be prepared for either. And to get back to the question about equity then, well, that would be a pretty dilutive equity raise. You're talking about 25% level dilution, so we didn't want to do that. So what we're doing is we've tried to go for the minimum amount of capital that we need to complete these tasks leading up to that stage 1 financing, rather than trying to do the stage 1 finance now. So it'll give us better options, it'll give better visibility to the partners on what they're getting into. Diligence with some of those groups is underway, and during that time period we have basically customers that we need to supply with larger amounts to get to the agreements needed also for those financing decisions. So in some ways you can see it as a bridge from where we are here to where we're going to be there. Additionally, frankly, in the last couple of years, we have not been able to include shareholders in any capital, and this offered a way, the SPP offers a way to do that to all retail shareholders.
Thanks, Mark. I think that covers that one. The next question is from Zerka, and he's asking about why we haven't been able to offer the SPP to shareholders in Sweden.
Yeah, there's different. We're actually, we'd love to offer it to everyone. Obviously, there are regulatory differences between Australian laws and other places. Now, share purchase plans, SPPs, are a particular carve out of the Act. They've got certain rules and regulations around them that are even more restrictive than things like rights issues. So it wasn't possible outside some jurisdictions that align themselves with those Australian arms. So it's not, we're totally conscious of that's the way it is. It applies to the USA as well. But all I can say is, invite you that the shares are still available to buy on market, obviously, at a price very, very close to the SPP price. But it's just regulations. We tried, but there was no way around it in the time frame that we had here with this amount.
Thanks, Mark. And just a reminder to everybody, if you do want to ask a question online, you can submit a question through the webinar software. The next question is from Adrian, and he'd like to know how big a risk is permitting, and what are some of the key risk factors in permitting?
Look, in establishing any mine in the modern era, permitting is a big deal and has risks involved with it. I guess what I would say is that in our case, bear in mind that we have permitted mining before. So in 15 and 16, we got a 3-year trial mine permit under similar circumstances that what we're doing now. So the one we're permitting now is slightly larger, but we've got a lot more comprehensive data to support the applications. And so we don't see that as achievable. In fact, we've had less objections and have had a smoother process to date than what we did back in 2014, 2015. And for stage 2, that is obviously a bit larger. So look, Talga, just to let you know, we have watched very carefully other companies, the way they've worked in Sweden over the last 5 to 10 years. And they've all gone down a fairly similar pathway in that they put in plans for exploitation and mining. They do not put in plans for the environmental support. They do that at a later time. And when they've finished the environmental support, then they put in a plan later for Natura 2000, which is a sort of EU level environmental support. So in other words, they put in 3 separate stages. And what happens is the individual departments involved in assessing these applications are not able to see all the data at the same time. So if they have a question about something to do with the environment, that document doesn't exist yet. They have to wait. So the whole process slows down. So in some ways, so what we've learned from that anyway is what we've done is we've spent the time developing all 3 stages of the permitting and put them in all together. So that is what is underway, and we expect that to have a better outcome than what has happened in previous years with others. The site itself is, it's not a bad site compared to other places that you could be. We're not up in the mountains, we're down in flatter country. We've done a lot of monitoring. We actually have got a live water, surface water monitor there now connected to the internet, so we can watch in real time what's happening with groundwater movements and surface water movements. So it's quite a high level of diligence, and all I can say is that, sure, permitting does represent a risk, but we think it's a manageable risk. It's something that's been taken very seriously and innovatively at the same time. And currently in Sweden, I can tell you that this is a big conversation going on. The departments, the mining departments and the environmental departments and the other land departments need to sort of pull their finger out, basically, and get with it, get a bit busier, get a little bit faster around their processes, while still retaining the very high standards that Sweden requires and the modern world requires, and we require. All I can say is that we have gone about it in what we think is in an optimized way that we believe is better than what has been done in the past, and we think the time is ripe for Sweden to move towards a project like this, especially in the battery space.
Well, thanks for that, Mark. So the next question is from online. It's a question from Philip, who has asked, can you expand any further on how you've been going with potential customers and the progress that's been made there?
Always a toughie. All I can tell you, just as I mentioned earlier, just come off the road 2 weeks, North America and different parts of Europe, meeting with customers in all of those places. I guess all I can say is that if you can imagine what would be a logical partner for us or a logical customer, both world-leading automotive or electronics companies, for example, then you should assume that we are talking with them or have some sort of relationship with them. That's about all I can say. Supply chain things for the end users, for battery cell making companies and things are not usually revealed. We do what we can, but yeah, it's not easy to get these things public. But all I can tell you is that, okay, importantly, the material that has been delivered to customers, do we have feedback that it works and that they're happy and that those processes are continuing to grow? Yes, we do. That's probably all I can say.
Thanks, Mark. So the next question is from Rod, who's been asking, will there be a sufficient graphene or graphite supply to satisfy our customers' long-term requirements and to warrant adoption of our products and solutions?
Yeah, good question. It actually comes up a lot about scale, because frankly, the scale of the anode project at 20,000 tonnes per year is not that big. Chinese plants are looking to do 100,000 tonnes each in some cases. So we have had comments that in fact we're not going large enough. Technically, yes, we've announced the drilling and the upgrade of our Niska resource to bump up the Vittangi project total to just under 17 million tonnes, and it takes our total graphite resources in the country to just over 50 million tonnes. So I guess in short answer, do we have enough graphite/graphene to increase production by a large amount? I think, did he mention 10 times? He wants 1 million tonnes per year?
Yes. Yeah.
Technically, yes. There's no reason why you cannot support that. Our current resource base is still only a fraction of the amount of graphite that we've defined in JORC compliant exploration targets. So if it can grow a lot larger, indeed, technically. We obviously would then have to go through a process of permitting that expansion, but I think once the project's up and running, that will be a lot easier than proposing a really giant project right now. Certainly we're in position to become a lot larger and more significant on a global scale, even more so than our European position.
Thanks, Mark. The next question is from PK, and it's, will Talnode-C's clients be named once commercial volume orders come through following certifying validation, or will this information be subject to NDAs?
I can tell you that all of our relationships are subject to NDAs. It's the first thing that happens, and often then they're repeated with joint venture agreements and other things like that. I guess all I can say is that it's a really tough time to be a public company that way. The businesses don't normally want this stuff publishing. If an agreement is material enough that we have to publish it, we may be required by our customer to seek a waiver from the ASX not to publish, or we may have to, and the manufacturer will just have to come along with that. So unfortunately, all I can tell you right now is it depends. We obviously will do what we can in our power to publish if we can, but it isn't always possible.
Thanks, Mark. And just a second question from PK. What is the plan and timeline for the sale of your cobalt resources?
Okay, so cobalt, the plan to spin off essentially or sell the cobalt resources was stymied when the market, the cobalt price as well as the general capital market became very negative about a year and a half ago. That looks like it bottomed during this year. In fact, cobalt prices on the LME have risen about 40% over the last 6 months. And we're receiving, in the trips we've been doing in Japan and Korea, it's become a very, very high, I think it's probably never went away, frankly, their interest, but it's become even higher now. So yeah, I would say we cannot give you a specific timeline on it because it depends on a combination of the customers and the capital markets for those projects. But I can tell you that things in recent months with the commodity price up and the markets themselves doing okay, I would say we've got a good shot at completing that next year.
Thanks, Mark. So the next question is from Luke. He would like to know with the share purchase plan whether it is underwritten or not, if there is a shortfall on general shareholder take-up.
It's no, it's not underwritten. If there's any shortfall, we'd be aware of that during the process, and we may seek underwriting before the closing date. But at the moment, there is no plan in place for that. We have modelled what we think is a modest amount that shareholders may be interested in, and certainly the directors who are eligible are all participating to their fullest amount. And yeah, so we'll see. But we believe from the modelling we've done from the interest that the budget basically won't be short on that.
Thanks, Mark. The next question is from Peter. He's referred to a number of groups. I'll read some of them out. Grabat, HK Group, Chalmers, University of Technology are claiming to have developed graphene-based batteries. He'd like to know if Talga is in discussion with any of these groups.
Oh, okay. Again, under NDA, I probably couldn't say. Certainly, some we've got some relationship with, but I couldn't define whether it was graphene based or not. Look, many graphene, ultra thin carbon, superconductive, super light, super strong, being shown in lots of battery technologies to do interesting things. So just imagine that in hundreds and hundreds of years of battery technologies, basically from the most simplest forms in clay jars to the most technical things right now that are powering little mini satellites whizzing around up in space at minus 200 plus degrees Celsius. There is a huge range of technologies being worked on. And a lot of them, graphene is a new material available. So it's not surprising that there's lots and lots of interest in it. There's lots of groups that will produce prototypes or testing results and get some publicity out of them. That's all fine. It's really healthy. We ourselves have got programs running with graphene in them. And of course, our Talnode SI product is a graphene silicon mix, actually. So there are lots of these things underway, and we play a role. We've got various partners who may or may not be those groups, but we certainly have got a lot of partners working with graphene products, and that includes our solid state as well as the Talnode SI, the silicon products. Yeah.
Thanks, Mark. This next thing's a two-part question from Simon. He's asked about when you expect to be self-sustaining from a cash flow perspective, and he's also asked about the potential capital required to reach that stage.
Yep.
That might be an opportunity just to touch back on the feasibility study and the expected date of the DFS.
Yeah, absolutely. So, well, the expected date of the DFS was end of March, so end of the first quarter of next year. But I guess more importantly is when do you start selling stuff to actually make some money? So the mining next year, the refinery, the first stage of the refinery, built early 21. And when that is producing, it's going to do 5,000 tonnes. Currently, it's split over about a year and a half. So that 5,000 tonnes is spread out. That 5,000 tonnes, if it's sold for the amount as the product price that we published in our PFS, that would do between 50 and 55 million US of revenue. So that starts in 21, and it requires 27 million US of capex and an amount of opex that will obviously bump that up. The common rule of thumb is, is an extra 40 to 50% in opex if it's the earlier stage. So essentially that project will wash its face. It won't make a heck of a lot compared to stage 2. It's a necessary part of the ramp up, but it starts making money in 21. We do intend selling some material before that from the scale up that's underway right now, but it won't be material until 21, which is not far away.
Thanks, Mark. The next question is from Malcolm. It's a question on Talnode E. I'd like to know if Talnode E is being actively worked on at the moment and what progress has been made.
Okay, Talnode E is being actively worked on. I guess on progress, all I could really tell you, we only recently announced that we had entered into the Faraday program. I guess what he really wants to know is, have we actually made something that worked, or is it just an aspirational target? Do we think it's just a theory that we can do something, or have we actually done something? The answer is that we have made some of the materials of Talnode E, and they work. So we have not gotten to the point where we have test results that we can publish or anything material enough that way. But we have certainly proven that the materials, the ideas that we have for making that product work, and that is what is now under development with the Faraday program that's running the Johnson Matthey and the Uni of Sheffield. So hopefully that helps.
Thanks, Mark. He's also asked whether you're working with other auto manufacturers or other partners on SS batteries.
I think I can say yes. If we're just keeping it that broad, we have several groups under NDA that are automotive and electronic companies that are specifically, the purpose of our relationship is specifically for solid state.
Thanks, Mark. The next question is from Luke, and he'd like to know if customers pay for product used in testing, potential customers.
Yeah, look, sometimes it depends on the scale. So if there's up to kilo type samples, then no. There are currently some NDAs which are more like, I guess, supply agreements. So there's actual tables of the amounts they will pay for larger and larger samples. So yeah, it depends on the customer, to be honest, in a large way. So if they're a really large customer with a lot of leverage, we're not really pushing them to pay for some amounts. But then we also have other very large customers that we do. It's about exceeding a certain scale that they'll start paying for development.
Thanks, Mark. And just a reminder, if anybody wants to ask a question, they can do so through the webinar software. This is a question from Gerhard. Which of your essential processes are covered by our patents, and how many of them are proprietary to Talga?
Okay. So we started, I guess our intellectual property library started with the concept of the cutting of the ore blocks going into electrochemical exfoliation. So our initial IP is based around processing. And we still have quite a bit in there. We also have some that we won't necessarily patent, we'll keep as know-how. Then we also have some IP in the products themselves, in a range of products, both graphene and graphite, including battery products. So I guess that the gist of it is, do we just have IP in processing, but not the product chemistries itself? No, we have both. We're probably more sensitive around processing IP, because that can crack open sort of other people, as we've seen over the last few years, copying some of our stuff quite madly. That's fine, but they don't necessarily have the extra twist, the extra bit that connects that product through to a customer. So yeah, we've got that. Probably a growing list of product IP. Just so you know, we've got quite a stringent process. We have monthly essentially reports. People have to write down their IP, and it gets processed and flows into the company. And we have various policies and things in place around how we take IP up through the company and make decisions around whether things are lodged or not. But currently it's pretty comprehensive across everything from the little bit around the mining, quite a bit around processing, but the bulk of it is around the products, which includes battery, some of the battery materials, some of the technologies we mentioned earlier.
Well, thanks very much for that, Mark. We've finished all of the questions that have been asked now, so I might hand it back to you just to provide a final wrap up and goodbye.
Thanks. I guess in closing, look, I think it's a very interesting time. I understand that capital raisings can never be done in an ideal way where everyone is happy. Certainly, it's the capital markets have been fairly tough over the last 12 months. I would say conditions have been fairly tough. We're looking at a better 2020. But from me and my fellow directors, I just thank everyone that has been along on the journey to date and is excited about going forward as we are. We're looking forward to the AGM in several days from the time we're recording this. And we're certainly looking forward to hitting the ground running very, very hard with following up. I'll be back on a plane in a few days, actually back over to Europe, trying to advance our opportunities there for continuing to grow the business. So all I can really say is thanks everyone for their support and their interest who's come on the webinar. We certainly intend doing more of them next year as we continue to go through some of these milestones. And we look forward to seeing you at any meeting you can get to. Cheers for now.